In this video, I'll compare HSBC versus Barclays. We'll compare each company's business model, so by the end of this video, you're going to have a better understanding of which company is best for you. And with that in mind, let's get started. Barclays and HSBC are both UK-based banks in my portfolio, but they serve different purposes. I hold HSBC to protect against China-related risks, as a significant portion of its capital is allocated to Asia. To mitigate potential losses, I use covered calls and out-of-the-money puts, along with HSBC's shareholder-friendly dividend policy to generate strong annual returns. Barclays' investment strategy differs greatly. Despite a return of over 10% of its tangible book value, Barclays is trading at around 0.45% tangible book value, making it an unfairly inexpensive bank. Reasons for this include earnings are not yet resulting in increased shareholder returns through buybacks and dividends, the business model is overly reliant on the volatile investment bank, and past negative perceptions and recent bias, although most issues have been resolved. Barclays has shown poor capital management and lackluster investment bank performance for a significant period. Contrasting business models. When it comes to banks, it is important to focus on their ability to consistently earn strong returns on their capital. Some business models are more desirable, and this is reflected in their valuation metrics. For instance, Morgan Stanley is valued at a high price compared to its tangible book value because the market appreciates its wealth management model's consistent growth, stability, and low capital requirements. HSBC business model. HSBC has a diverse business model for three core divisions that receive equal capital. The most profitable division is Wealth and Personal Banking, which generates $31 billion in 2022. The main sources of profit for this division are retail businesses in Hong Kong and the UK, making it the largest division in terms of revenue. The commercial banking business is a secure and profitable venture that primarily focuses on deposits and payments for medium-sized clients. The global banking and markets business is not overly dependent on fixed income, currencies, and commodities, and does not consume a significant portion of the bank's capital. HSBC is striving to shift its focus towards Asian businesses, aiming to allocate approximately 50% of its capital to this region. To support this strategy, the bank is also divesting non-core assets like its Canadian and French businesses. In summary, HSBC achieved a return on tangible equity of 11.8% and aims to consistently surpass a 12% return. The company plans to distribute around 50% of its profits as dividends. While HSBC's stock price is trading at around 1x tangible book value, it is not considered expensive compared to its return target, but it is also not distressed like Deutsche Bank, which has a much lower valuation. Barclays business model. Barclays' current valuation is distressed, trading at about 0.45 times a tangible book value. The discount is primarily due to perceived lower quality business, particularly in the corporate and investment bank, where a significant portion of the capital is allocated. The market assigns lower multiples to the CIB due to the volatility associated with the FICC trading activities. Despite this, Barclays has made significant progress in improving performance and market share in the CIB. Barclays has gained market share in the global markets division, outperforming US rivals and benefiting from the withdrawal of European peers like Credit Suisse. Despite a temporary drop in investment banking fees due to the bear market in 2022, Barclays is expected to recover thanks to a strong emphasis on debt capital markets. If we exclude the one-off administrative error in 2022, the actual performance of Barclays corporate and investment banking was much better than reported, with a 12% return on tangible common equity. While FICC trading is expected to return to normal levels in 2022, the decline in revenue will be balanced out by the recovery in investment banking fees and higher transaction banking revenue due to increased interest rates. Overall, Barclays is projected to achieve a ROTCE of over 10% in 2022, indicating an earnings yield of over 20%. However, the market is concerned about the ability of Barclays to convert these earnings into dividends and share buybacks considering its current stock price. In 2023, the percentage of earnings allocated to a return of capital to shareholders is expected to significantly increase, which is crucial given the low stock price. Deciding on the best bank, Barclays versus HSBC. HSBC's business model is more diverse and balanced compared to Barclays, with less dependence on FICC trading. While its focus on Asia is beneficial, it also possesses a risk due to geopolitical tensions with China. Despite being a good income play, the potential for China-related risks limits the possibility of doubling its valuation. HSBC operates slowly and relies on steady execution and cost-cutting, making it suitable for selling covered calls, buying protecting put options, and earning dividends. Barclays, in my view, is currently trading at distressed levels. While the market has concerns about its high capital allocation to the CIB division, the franchise is more stable and balanced than what the market assumes. Great execution and expected earning its capital expenditure throughout the economic cycle. Barclays also serves as an important diversifier in a recessionary environment, as we saw during the pandemic. Moreover, the game changer will be the increase in share buybacks, which I expect to be substantial starting from 2023. Considering the significant discount to book value, this presents amazing value for shareholders. I have already taken advantage of the recent share price dislocation due to the banking crisis and have accumulated long-term call options as well. I estimate the fair value of Barclays to be around 0.8 to 0.9 of tangible book value. HSBC versus Barclays. In conclusion, HSBC and Barclays are different banks with distinct characteristics and risks. HSBC is an excellent choice to hedge against China's geopolitical risks and offers a profitable investment with double-digit returns. On the other hand, Barclays' lower valuation is due to its reliance on volatile trading revenues. However, it is gaining market share from US peers and is diversifying its business to more stable areas. Additionally, Barclays shares buybacks at discounted prices have the potential to significantly increase its value. Overall, both banks have a place in a portfolio, with HSBC offering lower operational risk but higher geopolitical risk, and Barclays having the potential to double with increased share buybacks in the future. So, which one are you going for? Barclays or HSBC? Let me know down in the comment section below. I hope this video was helpful. Thank you so much for watching. Subscribe.